Stock Market Technical Analysis Made Easy by Mike Russo, Creative Arts and Services, January 5, 2012. What you will learn: the difference between fundamental analysis and technical analysis, the difference between income stocks and growth stocks, how to use the following technical indicators to tell when to buy or sell a stock: volume, stochastics, and MACD. How is this presented? I'm using AT&T Yahoo Finance charts in the interactive mode. You can apply the information I give you to any site that provides technical analysis.
There are two types of metrics when you're doing a technical analysis on stocks, or I should say when you're doing an analysis on stocks. We'll take a look at Chipotle's. This is a high-flying stock, and I'll show you the difference. Okay, here's Chipotle's, and the first type of analysis is the technical analysis. In the technical analysis, you have technical indicators, and there's all types of technical indicators. What the technical analysis does for you is it tells you when to buy a stock, not what to buy. The other type of analysis is the fundamentals analysis, and that involves financials. You come down here to income statements, and you can analyze the income statements. Balance sheet, you could do that, and even cash flow. Now, those metrics for the fundamentals tell you whether the stock is healthy or not. So fundamentals tell you whether the company is really healthy or it isn't healthy, and the technical analysis tells you when to buy a stock. So we are going to stick with technical analysis now, and then in another presentation I'll actually do the fundamental analysis. So now the other thing you need to know is that there are two types of stocks. There's income stocks, and then there are growth stocks. Now, the difference between an income stock and a growth stock can be seen basically in the trend line that's developed. You see, Chipotle's is a growth stock, and that is, look at where it was down here. It was at 219.43 back in February. And if you go all the way up to where it is now, it's at 340. So you see there is a trend line that is developed that is, if it's a good stock, then it's constantly going up. Now, let's go take a look at what a income stock looks like. An income stock would be something like a utility, like AT&T. This is AT&T symbol right here, the T, so we'll click on that. And just remember what the growth stock looked like, and now we'll go take a look at an income stock. And we'll select 1 year so you can see the trend here. But you see, in an income stock, that you really don't have that same type of trend, and as you do for a growth stock. And one of the reasons for that is because they pay dividends. So therefore, when they're paying out dividends, the stock drops off. But you can see here that it doesn't have that upward trend. So let's take a look at the dividends, and let's see when it actually paid dividends. You see with this D where it's marked here, that's when it actually paid dividends. And see, April the 6th, 2011, and the amount was 43 cents per share. That's what they're paying. Now, with a income stock, some companies allow you to do a dividend reinvestment program, and that is, they don't pay out the dividend to you, but it actually gets reinvested. And that's really not a bad deal because you can do income averaging that way. and that will level out your the peaks and valleys as far as the fluctuations in the stock goes. Now let's go back and take a look at Chipotle's again as far as the technical analysis itself goes. Let's go back to a 1-year view and let's go take a look at some technical indicators. The first one that I like to look at is the volume. And we'll just click on draw, and there is the volume. And what the volume does for you, you can look right here, you can see that we have very high volume, but this high volume was in a trade where people were buying like crazy. And the volume over here was 1,430,200 shares were traded. But in order for that price to go up, that means that most of those trades were in buying the shares. Now we go over here and you can see volume's pretty consistent, and then boom, this time the volume goes up, but the volume is going up in a down market, which means there was a huge sell-off at that point, and that was back in May. And then you can see that volume here is pretty consistent all the way up until the current day. And that's about all there is to volume. Now the other thing I like to look at is the fast stochastics. Now don't let that name scare you, because all it really means is that it's a random variable that's used for probability. So we'll draw that, go down here and take a look at it. And this is called an oscillator because it goes up and down, it's constantly varying. But the nice thing about this is this really tells you when you should buy and sell a stock. When it's down and it's around 20%, that means that the stock has been oversold. And that is, when they say buy low, sell high, well, that's a good indicator to tell you that, because now if you take a look at this bleep right here, you can see it just about corresponds to that down market at that time. And if you come out here to the very end, you'll see where we are in the last few days or weeks right here. And again, you can see that there was a sell-off here, and that would have been a good time to buy. But right now, in the last few days, it's starting to go up, and here it's actually overbought. So you don't want to buy at this point because it's overbought. You want to wait till it gets into an oversold condition. And this is what I was saying about that the technical indicators tell you when to buy and sell. So now look at it from a sell standpoint. This would not be a good time to buy, but it would be a good time to sell because it's at a high at that point. Now you can't predict what's going to go on at this very end right here, but you can see from the past what kind of pattern it has here. So you can forecast in a sense what's going to go on. You could get into a situation like this one right here. That could happen out there where it's just going to stay up here in an overbought condition for a while, for a few weeks. But when people are buying and selling, there is always going to be an up and a down part of this oscillator. So anything over 80 is a good time to sell, and anything under 20 is a good time to buy. Now there's one more thing I want to point out here, and that is one of the classic formations. If you take a look over here, you can see that this is a shoulder, there's a head here, and another shoulder there. And that is a signal that a stock is going to take a downturn at that point. Here's another one right here. There's a shoulder, the head, and the other shoulder there. Now they're not always going to be a perfect formation like that, but you can see this one was pretty heavy in the downturn. Now there's one more indicator that I use. I only use 3 of these. And the other one is called the MACD. Now the MACD is another oscillator. In this one, you've got 2 lines here. And when the blue line is below the red line, that means, here we can go up here and you can see, that means the stock is in a downturn situation. But when the blue line crosses, that indicates that there's an uptrend, and when it's above the red line, you can see it there, then that means that it's reached a peak and is coming back down again. So you can see this. You can see the correlation here. Now see, here's the blue line going way below the red line, and look at the downturn that we had in the stock. And if you come out to the very end where we are now, you can see that the blue line has transitioned below the red line. It's come up and it's crossed over, and look at the trend that's up there. Now we're in an upturn, and we've had that upturn. Now it comes back down and crosses over again, and that's where we are right now. We're right in an upturn. Again, you can't really forecast what's going to go on at that point, but it does give you some kind of an indication. Okay, that's all there is to technical indicators. It sounds like it's very complex, but it really isn't, and it's not rocket science. I hope this has helped you in understanding how technical indicators work. Thank you very much.